All right, guys, here we go. Today's video, we're going to answer a few questions. People asking about how we knew the exact location to go short both gold and silver, especially after they've had such a great run, number one. And number two, so many, big influencers out there saying we're going to reach, near term new highs. So let's just go ahead and start off with gold. We're looking at the micro gold futures, which, in my opinion, not financial advice, is the best way through the micro futures to hedge your positions. Like obviously now we're short, and you'll see that again on the micro futures silver, and then after we bottom out and start reversing, then, if one chooses, they could take those profits and buy what? Yeah, more physical. So that's how we play this game back and forth, also with oil. But anyway, let's go ahead and continue this about the gold. And as you see, we were coming up to this green dash line. And if you've followed us for a while, you'll see these green dash lines, here and there all over our charts. That is a major, significant, uh, measured move, price location that if you're under it, it's major resistance. If you're over it, it can provide major support. Okay. And we teach that, how to find that location and how to exploit that location. But, here we are. And right now we're in what we call a potential bow tie formation where you have two moving averages. Here we have the 200, the purple, and the 20 simple daily moving average converging together. And it doesn't really matter what two moving averages. It could be the 50, 100, or the 50 and the 20. But when they're converging together, um, high odds, high probability, at least on that timeline. Like if it's the hourly chart for that 1 hour period, price will hold, or on the daily, for the day it'll hold. And then obviously as price rose into the next day, the moving averages will move, separating them out of that bow tie formation. And then you can get, either price movement continuation to the downside, like possibly in gold here, or if the uh, you know the moving averages are on the other side, then you'll get the opposite effect of prices coming up into them, if that makes sense. But anyway, right now, well, the 200 and the 20 seem to be holding, price a little bit for us in the gold markets. Then our next target, or higher odds, higher probability target, will be this high pivot going back to about the middle of November, and then we have this consolidation zone through here. So resistance came down, made a low, higher low, and then broke up and out. And then we tested a number of times. Of course, the more you test a support or resistance, then at some point that will break. This support will break, and we'll come on down. Or if you're going up, that resistance will break and you'll continue to the upside. Now, real quick on silver, we were in this, to kind of show you how we got there, we had this three bounces off this trend line inside bar pattern where you have all these candles inside this red candle bar. And then, according to classical technical analysis, most times you'll break out on the fifth candle. So one, two, three, four, five. Okay. So scale in, rest is history. Three hits of this uptrend line. We were in an ascending wedge formation, broke out, came back and retested it again. Perfect. Right out of the textbook, classical technical analysis. Once you break, a support line, trend line, um, any type of price level that you have a major break of, then price will, come down, then it'll come back and retest that level, which we did. And then we got this little spinning top doji indecision candle. Not really a double top, but everything up here, trying to run up, but hitting resistance. So we put on our short position there with our, more importantly, the most important thing, stop loss, above the high. If we had closed above it of this candle previous to it, okay? Because the first thing you want to do once you spot a potential trade, whether it's long or short, and it's very easy to do both. Just click the buy button to go long, click the sell button to go short. But anyway, um, yeah, once you pick that spot, then before you even click the button, you need to have your stop loss set up and then continue your uh, trade thesis. But anyway, as you can see, we're down under that green dash line, a significant price level that we need to watch. And if we close under there, we still have, a couple hours to go. To go, then we'll probably add to that, looking for more downside to either. Well, we have two factors here: the 20 and this low pivot. See if that holds. We get any, rebound, and so that's what we'll be looking at as a target near term, probably this 23, because they like to, the markets like to go back to those whole roundy even numbers, and then right under, yeah, the 20, which makes sense, and then your low pivot here, and then kind of what popped all this off was that we were in this is the DXY US dollar currency index. We were in this descending wedge for it seemed like forever, and how price breaks out of these, it either goes sideways, like we are right now. I mean, you can't make this stuff up, or you get two or three continuation candles, bullish engulfing candles up to the upside. But what was holding us down, what's still holding us down, at least near term, is the 20. We haven't, actually, we haven't hit it since this candle back here on the, 1st of November. We've been under the 20. So it's going to be hard to get back up and over it. The best way to do it, if the Fed's going to support the dollar and they're going to push it over the 20, is to trade it sideways, build a foundation, build a base, and then break it over. But still, you have, at 106, this 200, which is a bear to get back over once you're under it. It takes, a little bit of price action and actually, some FOMO to get it done. However, I know I'm going back and forth here. However, what can make that possible is with a stronger dollar, we get more of a cascading, a waterfall effect in the risk on assets. Basically, your Dow and S&P 500, so on and so forth, and that with that pulling over, people bailing out into more risk off, less risk assets, which believe it or not is a dollar worldwide. Actually, at this point in time in history, we could see it, running up even harder, which would cause our gold and silver micro futures to dump even harder and further to the downside, which at some point, they're going to bottom out. We'll find that bottom, and then we'll take those profits, roll it in the physical, and then, we're off to the races again. But all right, guys, I appreciate you watching. Give us a follow on Twitter and check out our Patreon member site, and we will see you on the charts.